Hey guys. Yeah,
sorry, I'm still vibing
in the bubbles on the right side. You're both dancing all of the 2 minutes.
Wait, could you see my camera the whole way through, by the way?
Yeah, just me, not the chat, just me in the bubble down in the top right corner. I can see both of you dancing, basically.
I thought you didn't see. Well, Jake, now I know, because I could have been doing something seriously, excuse my language. I could have been doing something really weird. So I'm glad that now I know you can see my camera.
Yeah, that's a heads
I feel
up.
really
Yeah,
invaded now. I actually feel super invaded. That was like, you see that time at the time, like I gear myself up, a bit of personal time. But now I feel super invaded now.
Okay. glad we didn't go live back then. Let me open the chat right here, and let me open the chart as well, and we can be rolling.
Yeah, man.
By the way, do you have any insights on the Powell's press conference?
Yeah, man. Yeah, this is frick me. This is interesting. You know what this is, Jake, to be honest with you. This is purely obviously Trump pressure. He wants Powell out before May. He wants him out before May. This is all this, this cause of fraud, this apparent fraud of 2.6 billion is nonsense, to be honest with you. Like, they just want him out so that they can get what their puppet in and then be cutting rates a lot faster, because they know Powell's not going to be budging. He's not going to be budging or moving aggressively as Trump wants. You see, like, how Trump's just trying to pull the strings. Everything is unfolding, right? He's obviously did what he did Venezuela. He's trying to do what he's doing with Greenland. And now obviously he's trying to do what he's doing with Powell. Like, it's crazy. Like, this guy's like an octopus right now. He's just, what's next? So anyway, with that, obviously dollar's down today because it's the worries about the Fed's independence.
Yeah, I mean, I think it's going to continue this dollar weakness. I think it's going to persist. We did bounce on the Friday's NFPs, and it was pretty obvious. I mean, the 1 hour candle today is just enormous. So I think it's going to persist. My target is eventually at the top at 1.18 eventually, because that is at the same time the start of January, the start of 2026. So I think market is going to grab that liquidity up there. So I think it's going to most likely persist. And on the other hand, let me just bring the let me bring this on the screen. So stop sharing, change the screens, share. All right. And at the same time, again, if we take a look at the COT report, now it's open interest 60, almost 70%. So it's risen since the last week by 1.2, and euro is now mostly bought against the dollar across the major currency pairs. So in that regard, I think euro US dollar will continue towards the upside. I mean, big players are buying it. You saw the candle on this morning, and everything like suggested we should go back to 1.18. What's your view, technically speaking? Are you on the same page, or are you sitting on the fence?
I'm not on the same page with you right now. The reason being is because, like, for me, and it's crazy, it's absurd, but when you look at obviously euro, when you look on the the euro dollar on the weekly chart, okay, monthly, fine, structure is to the upside. Okay, do you know what let me just retract what I said at the beginning. let me just revise that slightly. Obviously, the monthly structure is largely to the upside. Can I just share my screen quickly, Jay?
Go ahead.
It's easy, just so people can see what I'm visualizing at the moment. Share. Okay, entire screen. Bam. Yeah. So what I mean right now, this on the monthly, obviously structure had been largely to the upside, you know, from 2025 as we were anticipating. Obviously, this was the Trump trade, which you know, unwinding of the Trump trade where we had this push to the upside. And this, like, I've seen it so many times, you know, with this sort of price action. And like this price action here is obviously consolidation, obviously a triangular pattern, a bullish pennant, however you look at it. Here's all of our pole. Here's the consolidation subject to an explosive breakout. And, you know, it looks like we're going to get that breakout this month. Okay. And I think that's coming. The only thing why I said to you, I'm not, I'm on the fence rather at the moment. It's just because we're in this awful range. And it's funny because we've been in this range since late June.
Yeah.
You know, nothing. It's 118 downside, 115.50, 115. Okay. 300 pip range for 7 months is absurd. So when this breakout comes, it's going to be big. It's just a matter of when. And I will be with you on the, you know, on the further upside when we take out 118, you know, we go past this range.
Yeah.
But this is going to be significant, you know, if we to break that or not. We need something significant to break that. If I just quickly go on a daily, we're obviously trying to see a BOS on this pullback, trying to break structure where we printed lower highs, lower lows. Let's go on a 4-hour moment. We'll see it more clearly. We're trying to get a break of structure, but you know, we could still end up being printing a lower high here. So that's why I'm just on the fence. I'd only be long euro, interested in long euros when we break 118.
So above 118.
Above 118, I'll be interested in long.
That makes sense. I mean, from my perspective, I think once we get to 118, we're going to go sideways for a little bit because that is probably the zone with the highest volume. So what I usually see in those zones is that market gets to the zone and consolidate a little bit. But then eventually, if we break above, creating new highs above, what is it, 1.185, 1.185, I'll be definitely taking the long stand. So my trading setup at this moment is actually, let me bring the screen back here. Okay, so it's actually,
all right.
I'll wait if we're going to bounce from this high value area because we still kind of consolidated about it. Market seems like he would like to go higher, but we did not yet. If we close above 117, I think that we will do some sort of a pullback either to this area. And if so, if we're going to bounce on confirmation, I'll be definitely buying somewhere on the way up because then I think we're going to get to 1.18. Then market might be consolidating, as I said, a little bit there, but it makes absolute sense to me that the big ones are going to get to 1.18 for the volume, for the liquidity up there. On the other hand, if we're going to as well close like below these levels, I think then we can go create new lower low before any potential reversal. So yeah, this fair value gap actually is deciding for me whenever we're going to go upside or we're going to see new lower lows once again. That is, like, from the technical standpoint, my view. Of course, fundamentals can change a lot because tomorrow we've got the CPI, right? So there might be another trigger. And actually, to be honest, I don't know much of what Powell said. Do you have some like top highlights from what he said, or you didn't have time to go through the yet?
I actually, no, I haven't actually dived into Powell's comments yet. But obviously, he's going to be, you know, largely defending himself. To be honest, it's not about, for me personally, it's not about what Powell says in response. It's how far does this progress? It's not really about what Powell says or does. It's if they actually do this and what they're trying to do, they're trying to break the man at the end of the day. They're trying to break the man in terms of to get him to step down. And it's like they're just going to obviously drag him through this potentially mentally exhausting process now, and obviously trying to publicly humiliate him to get him to come down to resign before May. That's all it is. That's it. And if he doesn't, good on him. And then obviously dollar will have a chance to potentially bounce back because I don't think he'll be pressured to rush. Like,
do you think?
What? Like, man, Jake, this is a freaking circus because,
it is.
Like, as a trader, right? As a trader, as a market participant, and you're trying to trade, you're trying to think, okay, let me look at facts and figures right now. Oh, okay, where's the United States? Okay, inflation still sticking above the Fed's target. Labor market data, we saw non-farm payrolls, which just confirmed job hiring is slowing, but job firing, we're not seeing a lot of firing at the moment. The unemployment rate is still relatively low. GDP is still okay. The US economy is not in a bad place. We're heading towards a nice soft landing, not a hard landing where we have recession, not a place where we need to be aggressively cutting right now. So if you're a trader, you're looking at those facts and figures and thinking the Federal Reserve shouldn't be cutting fast. This is a dollar positive. But they're now having to deal with the circus of, you know, is Powell potentially going to resign earlier in May? Is Powell going to bow to pressure now from Trump and maybe start changing his tone, become more dovish? Because when you look at that last decision, yeah, he was dovish, but maybe he wasn't as dovish what Trump wanted. He didn't cut by 50 basis points. So it's just a circus. And it, like, these sort of things really irritate me. Like, they really irritate me. I hate bullies. And Trump is obviously, as much as I like the volatility brings market, he's an effing bully boy.
Yeah, he's a master of it. I mean, he doesn't bully just like locally, like Fed. He does it all over.
Man, people are scared of him. Look at what he's saying about Greenland right now, and look at Europe. Yeah. They're not saying anything. They're little mice.
Yeah,
like, people are fearful of Trump, and obviously he has his own puppet masters, which we won't go into. But it's just an insane world we're in right now, guys. It's crazy.
It is.
You know, Trump captured someone's president. Like, we're in crazy territory. Anything can happen in this world. And I've just seen Trump to interview BlackRock's Rick Ryder. Maybe that should be called change the R to D. And he's not a rider anyway. It's R-I-E-D-R, Reader, whatever. He's BlackRock's chief investment officer. But anyway, we're still seeing the commentary at the moment about who's going to replace Powell. So it's just freaking nuts.
Yeah. Yeah, I totally agree with you. So many things happening. I can't even catch a break. Like, get information on all of it. So, you know, and then you need to trade it as well. So
yeah, exactly. Like, this is the thing. Like, traders right now, like the everyday trader that's obviously potentially not considering the news, they must just be like, like, what's happening? You know, it's very delicate times. It's not just about headlines, guys. You know, for everybody that's on the stream now, it's not about headlines. It's to understand, you know, what these headlines mean in terms of the bigger picture of things. You know, how we broke down Venezuela, what that potentially means, what Greenland means. It's breaking down. It's not just picking that one headline. It's breaking it down. And then what can that implications could I have on the markets? And then what are markets going to start pricing in? You know, it's not just one singular headline. So don't just get sucked into one headline. It's not about that.
Yeah. I mean, it's a right time to switch from fundamentals to technical traders, because as a fundamentals, you see everything that's happening. You know, it's stressing you out. You can't take a break, and as a technical trader, you just sit and watching charts. So, you know, the world is nice. It's pink for fundamental traders. It's
nice, man.
Okay,
look at gold.
Sorry?
I said, look at gold.
Yeah,
it's crazy.
I was about to take a look.
Oil is also going higher. So
yeah, I think we both lost the bet. We both lost the bet on the Friday.
Well, yeah, saying that though, you know, basically, you know, on when we're talking about that is Wednesday afternoon, what we saw again when you look at the oil chart. You know how, speaking about that, the liquidity sweep of the Asian range, we had that sweep of the high again, of the Asian range high, and we came down and tested low, and then we started bouncing from there. On Wednesday. You look on Wednesday.
Yeah.
On Wednesday. So between 12:30 and 1 o'clock.
Yeah, right here at the top.
We had a sweep of the Asian range high, and then we came down and challenged the low and bounced at the low, and then we started pushing higher.
Yeah, it's true basically that you were saying with Angel that you would be selling, and it was somewhere here at the bottom of this big candle, so you would still catch some profits eventually. Market
profit there. Yeah, but then it just bounced. Yeah, exactly.
Matter of fact, I had it on E8 account. I was selling. I had orders here at 50, 58.40. Eventually, when it went to profit, just set up to break even. Lucky me that I did that, because otherwise I would be in a pretty nice loss right now. But I was genuinely believe that we're going to just take these two levels and then we're going to go lower. Yeah,
it wasn't a bad call though, really. You know, in terms of you saw it, it's going to pull back. It's quite a really good call, to be fair, from where you're calling it.
Yeah, but I didn't expect that much volatility. I just expected that pullback, just because there's again a lot of volume in this area. So I thought before we go any further towards the downside, the market is going to take all of that liquidity and then we'll go downside. But now, you know, we are kind of creating some sort of a flag or channel. So I think we're going to break above again.
Yeah, I mean, that looks bullish.
The 60 level.
That looks bullish.
High.
Yeah, 100%.
Yeah, it's a higher coming. Higher coming.
Yeah, definitely. The level 60 is going to be taken.
Yeah, it looks nice. And with the good thing is right now, what's quite attractive for these longs is, oh wait, hold up. You look at the futures. You're on oil.
Yeah, I'm on futures. Yeah, okay. I'll let you share the screen.
Yeah, it's the same. It's the same more or less. I was just looking at cash, but I mean, oil futures there. We're down on the day. I mean, we're in minor positive on cash, but oh, sorry, I'm sharing my screen. Yeah, so I think the fact that where we're at right now, we're minor positive on cash, but you'd expect there's room for this to go and run to the upside now. It's really, really nice.
Yeah,
I think you would have seen here. As I said on the last stream, I want to do some bit more back testing on it, but the oil market really responds, guys. You know, obviously I trade Asian range, right, in terms of my intraday plays, but this is what I was talking about with Jake, obviously on Friday, where we're taking out the Asian range high and we're coming down to the low. You know, we're coming down to the low. But look at here today, on Friday, we took out the low, and we took out the high and the low, obviously structurals to the upside there. And then we carried on to the upside. And this morning, we've taken out the Asian range low, and now we're going to go and push to the upside. And obviously there's so many confluences with this. And obviously this should be a higher high, and we'll obviously take out the Asian range high. So this is looking really nice, to be fair. And
I am really considering like buying it towards the 60.
Yeah, it looks looking nice.
All right, let's just quickly full port together. Come on, let's all do it together.
All right, we can do so.
Let's do it. We might as well.
What would be your risk ratio on that? Because I would at least, because if we're going to get to 60, let me share the screen again. Where is it? Here. I think we can get a little bit lower, back to again the value area at 58.40. So I think if we're going to get there, for me now entering, that would be huge stop loss, because my stop loss would be then somewhere probably like here. And in that regard,
you think we're going to pull back first before we go?
Yeah. I think we're going to get, because we're quite close to that. I don't know if the liquidity was taken at this low. What is the drawing at this low or not? But I don't think it was, because otherwise we would see a bit of a bullish gap and a more bullish momentum. Then we created another bearish candle. So I don't think we took that liquidity. So I think what's going to happen is we're going to have a little bit of pullback and then going towards the 60. But my risk ratio, if I'd be entering now, is 1.4, which is not that good. Right. And at the same time, the stop loss would be like 90. Sorry, this is quite a lot. So to be perfect trade for me, I would want to oil to drop a little bit. But if we do, if we create new lower low, I'll be going for it.
Fair.
Sorry, Angel?
Fair.
Yeah, I like your idea. I mean, if we can see like a sweep of liquidity and a V-shaped recovery from there, it's gonna be nice. But I don't think it's ready yet to form the higher low. It feels like it still needs to sweep, you know?
Yeah.
Still needs some.
Because if it would be confirmed, I think we would create some sort of a divergence, so gap, or at least another quite bullish candle. But since we created one bullish candle and then market drop down, back down, then I'm not really convinced that we're going to go to 60 at this point.
But you know what? I don't know. I tried to short oil for the first time this year last week, and I got clapped. So I'm now on the fence. Yeah, I'm just waiting, you know?
That's fair.
I'm
waiting. Fair. And about gold, let's take a look at the gold. Yeah, we got new high highs. And what now? What now? Because last time, guys, if you remember that last time, we were somewhere here. Sorry, I didn't want to do that. we were somewhere here when we had the live stream session, and all three of us said it would be nice if gold would just fill out the gap, and then we can buy. Well, we've got another scenario just like we had last time. We've got the gap right down here, and what's your thought? Are we going to again wait till the market slips down to the gap, or are we just going to buy?
If you look at the daily, Jake, on that pullback, you'll see a daily gap right there in that low on the previous one. Yeah, it was clean.
Where?
On that pullback, on the previous one before the leg.
Oh, on the previous one, the gap. You mean this
there's
one?
a daily gap. Yeah, there's a daily gap right there.
The daily gap,
pretty much that is giving the retracement. It was just clean. I was waiting lower. I really wanted to see the weekly one, but yeah, I guess we're just ripping higher from here.
Yeah,
it's time. You know,
it looks like it. I mean, it could be something just like a small pushback, and then we'll be continuing. Well, yeah, kind of tricky, very with the gold, because every time I say there might be a pullback, but I can enter, it's always going to create a new high. So
yeah,
unfortunate. And we at the same time don't have any negative news for gold, so there's not really a reasons for gold to go and create the correction or the pullback, other than technical reasons.
Not bad. So bullish.
Yeah.
So it's crazy. Just quickly, you know, if you look at silver, I just got my chart here quickly.
We can see that.
It's with silver. Obviously, I spoke about this in our first stream back, and I was obviously spoke about the metals outperformance, and I said, you know, watch, we're going to see a follow through of momentum for metals this year, and obviously silver. What's quite nice is we had this consolidation since late December, silver, and now we're getting that big breakout. And you know, when we have these breakouts, we've seen numerous times, it just goes. And like now that we've broken from this range, this is probably just going to go clear. You know, we'll be looking at that psychological $100 mark. Obviously, everyone always talks about gold, but like silver has bigger moves when it breaks out. Look, it's up 5.5% today. Gold's up 1.94. So, you know, I think we can expect to continue to see outperformance with silver. You know, people are trying to people are hoarding silver as well. Like we're seeing a lot of accumulation of silver. It's not just about gold.
Yeah, that's
true. People are trying to find that bargain, because silver's still a bargain when you think about it. If gold's 4,500 per ounce, I mean, obviously gold is more valuable, but silver's also used in a lot of products as well. It's used in a lot of goods, and it's undervalued for what it is. It's $84 freaking dollars. You know, so it's cheap.
Yeah, makes sense.
So per ounce. So yeah, man, I think expect silver to break out. I mean, we have broken out. Obviously, we took out this high area here at 81, $82. Potential pullback there. Obviously, at the end of the day, with these, what I would note, if I was to just note something, is obviously outside of trading this trend and the structure, watch out for those periods, guys, where we basically just get that stop hunting, you know, that liquidity sweep where we're false breaking the structure, but then we push to the upside. Whenever you see those short-lived moves, so say for example, now everyone's obviously trading high, low, high, low, high. You know, we might briefly break that, you know, that higher low area, and then it doesn't sustain and we see a quick reversal, you know, so just be aware of those moves. But ultimately, dip buying, you know, for gold, silver. Yeah, man.
Yeah. Just to briefly take a quick look at the CPI data tomorrow. And I wanted to say that when we were analyzing Euro US dollar, and you just bring the topic creating new highs and new high lows. By the way, guys, the market sentiment on the retail side with the Euro US dollar is still very bearish, which means if the big boys are now long and retails are short, you wanna go long. And I think every retail trader sees the same. Meaning we've got, as Ken said, a new lower low, correction, new lower low, correction. So a lot of retails are now expecting that market is going to be developing as it should be, like a textbook. But I don't really think that's what's going to happen. And with that being said, we've got tomorrow, and if we actually get lower CPI data, so we've got expectations 2.7 on an annual and 0.3 on a month to month. So if we're going to get lower inflation, that would be the biggest catalyst for Euro US dollar towards the upside for dollar bearish momentum. So if you actually see that tomorrow, I wouldn't be hesitating, at least me, not financial advice, but I'll be buying euro US dollar if I'll see lower data. Then what's the forecast?
Yeah, fair.
Do we have any other data? I think we've got as well retail sales, or is it not this? We've got this inflation, and I think we had other data as well. We've got PPI, of course, but I think CPI is on tomorrow is going to be more important. And I thought we had the retail sales, but I might be mistaken. Maybe actually the next week. Yeah, looks like it. And then we've got also the GDP from UK. By the way, any news from UK?
On Wednesday. We do have retail sales on Wednesday, by the way, Jay.
Sorry?
We do have retail sales on Wednesday.
Do we? I'm probably missed that.
Yeah.
Oh yeah, we've got
Wednesday.
PPI, and after PPI, we've got right away retail sales data. Yeah.
Yes, sir.
Okay.
Yes,
sir. So Wednesday is going to be
with UK. Yeah, with UK, it's a tricky one with the pound. Obviously, yeah, we've got UK GDP on
Friday. No, sorry, Thursday, 7 a.m. Yeah.
Oh, UK GDP. Yeah, so we've got that. I'm just putting up. So obviously, the month-to-month, the last couple of readings, we've had negative readings for UK GDP. I just wanted to quickly pull up to see the outside of the month-to-month, the higher time frame, the year over year. Just want to quickly see where that is, or UK.
Sure.
So that UK year-on-year GDP is sitting at. Oh, sorry, it's just a month-to-month reading we have. Oh.
No.
Yes,
Is it not a little bit? If it'll go higher, both.
I'm oh, here we go. Yeah. Okay. Yeah. So we've got the year over year as well, which is interesting to keep an eye on. It's expected to tick lower from 1.1% to 0.8. So we've got the 3-month average as well, which is contraction at the moment of 0.1, same as month-to-month, minus 0.1. So yeah, the UK data is not great at the moment. I continue to talk about stagflation, but I'm not a massive. When I look at the pound setups at right now, I'm not massive in taking shorts anything versus the pound. When you look at a lot of pound pairs, they're still tilted towards some further upside potentially for now.
Mm-hmm.
There isn't anything that I would personally short the pound of, and I'm like, I'm not a massive pound bear, and I'm definitely not a massive. I'm not a bull for the pound, but I'm not a massive pound bear. So for me, I'm not comfortable taking any trade for the pound.
Understand? Yeah, that's fair. That's fair.
Yeah, it's like the data is just neither here or there.
Yep.
I'm just looking at the pairs here, and I don't like the look of anything pound related at the moment, and I'm not surprised.
Chatanya's always asking about Euro pound too.
Yeah, that is a nice structure to the downside of Euro GDP.
It is.
That looks another drop. It's dropping. It looks nice.
It is.
Drop now.
But the same way you've got the pound that you wouldn't sell on my part is still the euro. I kind of still believe that euro has its strength, at least like looking at the index. We didn't go down on the index, we're just going sideways. So it doesn't mean that euro is now weak. It's just some currencies perform a little bit better, better than the euro. But still, we are recovering kind of. I wouldn't be fan of now buying the euro pound as we are in a pretty solid downtrend. But
definitely not.
If after the correction right now, if we create new higher highs and we will be changing the structure slowly, I might be considering trading it at least towards 0.873.
What buys here?
Sorry. No. If we now, where's my screen?
After the lower low.
No, if we now going to reverse and create new higher high, like above these levels, I might be actually taking just some trades the way I traded the euro US dollar last week, just as a magnet towards the important zone, which is 0.873. But I would need to see some change of a structure on lower time frames, which is 1 hour. So if we'll just continue this way and creating new higher highs, then I might be considering it. But eventually, looking at the higher time frame, it's still quite bearish. So
yeah, definitely.
Sorry, Chatanya, but I'm not going to probably trade the euro pound. And with that being said, I also traded one pair on last week, and it was Swiss franc. Eventually, managed to close on the break even because the trend or the market went against me. But I still believe there could be a reversal. I believe with the safe haven demand and the gold going towards the upside, I think the Swiss franc might actually do well in upcoming weeks. So if we're going to get that, and if we get down a little bit, again bounce, then and create new higher high, then I'll be probably swing trading the Swiss franc.
Yeah, fair.
Kind of like the view of it, but now we're still quite bearish, and I don't want to sell Swiss franc. Do you think Australian dollar should perform well as Swiss franc with the connection to gold and its recent momentum?
Yes, of course, definitely. AUD is number one for me, number one bullish currency. Okay, I said it in our 2026 rundown. I took longs, by the way, with Aussie CAD. So if you remember on last week, I said this was on my watch list. Am I sharing my screen?
Yeah. Let me do that, and you should be now.
Yeah, obviously I don't need to give you guys the full breakdown of this because I've done it already multiple times, but in terms of the fundamentals. But what was quite nice last week is a couple of things. Okay, so we've had that big breakout of this range. Okay, nice bullish engulfing to be like, okay, we are out. We've left this bullish wick, which I expect us to take out and continue to push the upside just on a macro level. So last Friday, we had poor jobs data from Canada. Not necessarily awful, but the employment change was 8.2K, which isn't that bad. But what's bad is a big drop from the previous. But what's bad is the unemployment rate jumped up from 6.5% up to 6.8%. Okay, so it's creeping back higher. And what that means is the Bank of Canada, who have been on hold with cutting rates, could potentially be closer towards resuming. The only reason they're on hold is because they wanted to observe the current, current economic outlook. And if it further deteriorated, which obviously this is deterioration, they can look at more rate cuts. So, and obviously, you know why I'm bullish Aussie. Let's walk through this trade. As I said before, I observed this breakout and I was watching. It's simple range breakout and retest, guys. Nothing glamorous. Then when we drop down to the 4 hour, obviously this is the retest. We started forming that pullback structure with lower highs, lower lows, and I started observing this after the data. I waited for the data on Friday, and then saw this build up momentum where see it time and time again where we're going to get a break of structure basically, and then we had that break of structure. Obviously we slowed down a little bit here, understandably it's Monday, but I'm expecting to just run this. To be honest, I've got quite a large stop loss, or wide enough rather, leaving breathing room. If we come all the way back down here, then I'll just be like, okay, whatever. But otherwise I would like to see this. I've got 3R looking to run it into 94.50, into this next major zone. Okay.
Simple. It actually looks very decent. I mean, if we go down back to 90.
Just quickly, every time you freaking say that, my trade goes against me. I have not forgotten. I'm starved every time. So
that looks disgusting then.
Technical words, that looks quite decent.
Yeah, that's what I was trying to say. I tried to support him as a trader, and
it's the Jake curse. There's a Drake curse, but you've got the Jake curse.
Do you know what? To be on the same page, if we drop back to 0.92, I'm going to join you on that trade. I'm genuinely going to set up an order on 0.92, and if we're going to drop there, I'm gonna be in it with you. So you can't tell it's my curse, but
I'll be stopped out at 92.
Is it your stop?
I'm at 92.30, my stop. So if we come back to 92, I'll be stopped out there. I can see. What, you think it's going to come back here?
Well, I would love to if I'd be taking the trade because it's now too much pushed. But
to be fair, I could see potentially be interesting.
The daily gap looks nice. There's a nice rejection out of the daily gap right there, and you're actually protecting the low. So I don't see any reason why we shouldn't take the highs from here. It's actually quite decent, Ken Chigbo. It's actually quite decent.
Just for the peace in your mind, I'm going to say it looks disgusting, but I will join you.
Yeah, next time Jake.
Yeah, but fundamentally, it makes a lot of sense to go for Australian dollar towards the upside and selling Canadian dollar, as you just explained, which was very reasonable.
Yeah, man.
Okay, do we have any other currency pairs that we can discuss? I mean, I'm waiting for that Euro US dollar for the CPI. Swiss franc goes the same for CPI. Euro pound, I don't want to trade now. And possibly the oil if we're going to get a little bit low. I think till Wednesday we can get there. So while Angel probably is going to deliver the indexes analysis, I'll try to take a look few other currencies. Guys, if you have some, just leave them in the chat. I'm going to take a look. And if you don't have anything now, then we can pass the mic to Angel.
All good, all good.
Perfect. So it's yours. I'm going to accept your screen here. And
Sure.
You should be good to go.
All right. So, guys, nothing have changed since last week because we're still trading higher. We had pretty much this higher low out of the 50% retracement, which is delivering really nice, right? My target for this week is going to be 70.50 for ES. It looks pretty decent, right? So if you look at today, something that I learned in the hard way is like today, the trading day before CPI and PPI in the same week is a hard day to trade. And I learned that in the bad way, you know? So today, if you're going to trade and look for longs, just be cautious about that you might see a lot of weeks, but it's still pretty much bullish. We finally took the all-time highs and we're just delivering. It seems like the momentum is kicking in right now. Looking at the daily time frame for ES, we do have this volume imbalance right here, right, where we are pretty much rejecting and taking out and sweeping the previous day low, right? This is not only the previous day low, because if we go to a lower time frame, what you guys will see here, this is pretty much a higher time frame, right, point of interest, which is the daily volume imbalance. But we are also rejecting the previous day low, right? And if we go to the sessions, we are also rejecting the Asian low, right? So when Asia trades lower, sweeps previous day low, and London rejects in this way because this is a V-shaped recovery, you can expect New York to deliver and distribute higher in the opposite direction, which is pretty much what it's doing right here, keeping in mind that the structure and the whole narrative is bullish for the indices, right? This is going to be a nice target today. I don't want to get involved or rush the price right here in this candle. I will just rather wait until I have like what was that? Do you guys hear something? I'm tripping,
No.
right? Yeah, okay. Yeah, that's fine. All right, so I'm gonna wait until I have like some sort of gap right here, either on the M15 or the M5, right? I'm gonna wait on the price retrace into that gap, and I'm going to look for the lower time frames. I'm going to de-risk myself if I have something to trade, just because of the reason that trading that day before PPI and CPI is just hard. But then it's going to be nice just to look for longs on that take, right? I would like to add the fact that if you look at the NQ right now, Nasdaq chart, sorry for the color difference. All right, it's this one. All right, so let me just look at the Nasdaq right here. This is the previous day low, right? Look at ES and look at Nasdaq. We have a divergence in price, right? Because ES is sweeping the previous day low and Nasdaq is not sweeping that low. So that's an SMT divergence, right? So if you match that with the fact that we are rejecting out of the previous day low, we have this nice and beautiful V-shaped recovery out of it. And then, of course, this is going to increase the odds to trade higher from here. So that's the play that I would like to see for ES and NQ for the rest of the day. This is going to be a nice target to trade. Keep in mind the new weekly opening gap right here, right? Is going to work as some sort of point of interest as well. So we either reject the new weekly opening price, right, or we use that as support to trade higher. So if we have more structure right here that matches with the gap between the new weekly opening gap, is going to support the price to trade higher. And why is that? Because if this is the weekly candle and we're opening, right, we're trading lower, we're leaving a week for the candle on the weekly time frame to close higher, right? So it's going to match that. Okay, I'm going to be following this narrative for the rest of the week, and I'm going to keep in mind what's going to happen tomorrow with CPI and Wednesday on PPI, because this can change. But as of now, I'm still bullish, and I'm not going to take anything else. I'm just bullish. I'm just going to wait until I have internal manipulation to trade higher, right? This is the only thing that I would like to see right now, because we're still trading in this range on the higher time frame. And even though ES already took all-time highs, NQ already has so many liquidity right here resting for the price to go and seek that liquidity. We have all the highs right here, and of course we have all-time highs. So it will be nice. All right, let's wait for the four candle closes at 10 a.m. I'd like to see this gap getting filled completely. If we have a nice close right here, maybe if the candle closes right here, then I can expect the same as always. Next candle open, rebalance, and then closing higher. So this thing looking like this on the 4-hour, right? If you look at this on the 4-hour, it's going to look like this, because we're going to open low, right? We're going to rebalance in the lower time frame. While this is happening, we're going to see pretty much a gap here on the M15 or the M5, and then you'll see the price retracement, a retracement there. So let's say this is 10 a.m., right? This is going to be the 10 a.m. So then you'll see a retracement back into that gap, and then the price trading higher from there. So that's going to be pretty much the playbook that I have for today. But yeah, just keep that in mind, guys. Let me just take this out.
Okay. We've got an earthquake again in the UK. Seems like it.
You say what? That's
I need
weekend,
to.
right?
No, I need to sort that out. I need to detach because my camera's on top of my screen, so obviously I need to.
Oh yeah.
Yeah, if I have it not on the screen, then it'll be all right. I forgot to do that actually. So
Yeah, it's better to have tripod behind the desk. And
I'll do that for the next time, definitely.
All right, all right.
Guys, YM, we had that nice retracement back into the daily gap that we were waiting, actually, which was this one. We tap into that gap, and now we're just trading higher. So we have a lot of momentum right now. If we look at this time frame right here, we have this retracement back here into the range, pretty much OTE, right? I like this high as the target for today, which is going to be pretty much all-time highs. Look at this retracement right here. All right. We have a nice sweep of Asian low, London lows, and everything. We also have here then an S&T. So it will be nice to see the price flushing through the highs for the rest of the day. But I'm not going to trade a YM at all, because it just doesn't look like, I don't like this price action right here on the hourly in the 15-minute. It just looks kind of sketchy for me. So I'm just going to focus on this price action. All right, on ES. For oil, well, same thing as Jake, because we'll still have some sort of liquidity resting right here. So I would like to see the price flushing lower. I don't think this is ready to go up. It just looks like bullish structure, but it's just weird. It looks like we're just consolidating right here. But just look at this price action. Right? I really wanted to see the lows from here, but just look at this price section. Awful. Right?
Doesn't
if you're
look
trying
any
to
good.
wait to get raped, trade oil right now. I mean, this is just awful for me. This is hard. Okay. So I'm going to focus on this leg in price, which is this one. We go to the 4-hour, right? We have this gap on the 4-hour. This is going to be my condition today. We either reject the gap and trade higher, or we just disrespect the gap, and then we start to flush lower through the lows.
I think we're going to get disrespected, because this looks like a perfect scenario where you might think this is a breakout of the range or whatever you want to call it, and then oil's just going to take a piss and it's going to go towards the downside again. At least
it will be nice. Will be nice. Let's see what happens at 10 a.m. Well, but this is actually closing inside the range, so we will have inside price action So I'm going to stay away from this unless we actually disrespect this gap and we close above this high. All right, this one then is going to confirm that we're going to trade higher. If we disrespect then this gap and we close lower, I'm going to look for shorts again. And I hope I'm not getting clapped this week trading over. All right, I'll keep you guys informed
cheeks claps
about it. Yeah.
Sorry. Well, it's true. The markets will bend you over and slap those cheeks, basically. That's...
I mean, yeah. So that's all I have, guys. Have a solid week. I wish you got luck.
Okay. Thank you so much for the analysis, Angel. Neither of us trade indexes, so it's a pleasure to have someone who actually does. Any, by the way, any insights on the crypto? Have you been trading Bitcoin lately?
No, but I got in positions for like long term, right?
Okay.
Not like trading, not like trading leverage or something, but I just add in like more positions on Bitcoin long term from that point. I really wanted Bitcoin lower, but with all the things going on right now and just that support right there. I mean, let me actually look at Bitcoin.
It's just going sideways. It's just going sideways.
Yeah, it's just going sideways. It's hard to trade right now. Wrong chart. It's just hard to trade with leverage because it's going sideways. If you're kind of like a scalper, it's going to be like easier for you to trade this. I mean, right now, just look at this. We've been pretty much in the same range since November 21st, right? The price is just stuck here. So after consolidation, we are going to see only expansion for either side. I'm not expecting a retracement from a consolidation point for the price to trade lower. So I'm not expecting something like this. Hold on. Where's the pencil? All right. So I'm not expecting something like this and then the price going lower from here. It doesn't make sense to me. I'll rather just then see a sweep of the lows for the price to trade higher or start slowly going lower from here towards that low. But I'm just, after all the things going on in the world, it just reminds me like, COVID and all that stuff. So if you see that the price is just struggling to go down from here, you just add more. At the end of the day, in 2 years, 3 years, 4 years, 5 years, Bitcoin will be higher from here. Not a financial opinion, of course, on not financial advice, but it's just my opinion on it. So yeah.
Yeah, man.
Yeah, that's what I told you last time we were trading. I think at the start of December or maybe end of November when we were talking about me adding Bitcoin on the watch list. So I wanted to trade it, but since then we're just ranging, so there's not much really to trade. And yeah, as I said, probably like last time, then that if you just buy it and hold it somewhere on the wallet, it's probably the best way how to trade crypto.
Yeah, Bitcoin. January seasonality is actually quite favorable. I mean, it is it's a little bit hit and miss, but since 2011. So if you look at data from 2011, it's had where are we now? We're in 2025. Sorry, we're in 2026 now. So that's 14 years. So in the last, is that right? 14 years? I'm doing the maths correctly. Yeah, 14 years.
Since COVID.
Since 2011. So so last 14 years, 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of the last 14 years, 9 out of 14 Bitcoins finished January in positive with a decent gain. I mean, it's not that favorable, but it's one of the best performing months actually. January, like January, February, are good performing months historically.
Interesting.
In terms of consistency in those months over the last 14, 15 years.
By the way, do you include that in an analysis? Because I know there are traders who basically trade the COT and the seasonality, mostly commodities, not really much forex currencies, but commodities. There I already met few traders who are like taking a deeper look into seasonality of the instrument. Do you include it in your analysis, or is that like not really important for you?
It's not really important, but I just find it provides additional confidence. Like it's additional confidence rather in that trade. You know, when I go look at seasonality, if everything's line up and then I see that, I'll be like, okay, nice. Then I've just got another thing in my, you know, my favor, really. But I don't really. Some traders really obviously have a strategy based around seasonality, you know, and obviously with COT. But I don't have a strategy around it, no.
Okay, makes sense. Okay, guys. Someone just said Japanese yen, so probably that's the last instrument that we can take a look.
Yeah, we've had continued breakouts.
Yeah, but Japanese yen, there's not much to talk about. I mean, yeah, we're going south.
Yeah.
If you remember last week, I was saying that I'm not convinced because the COT report was 50-50, and Japanese yen was going sideways basically since December. Yeah, since the mid of December, we are going sideways too. I don't know what was happening because usually we were creating new lower lows, but now I'm back on a bearish bias with Japanese yen because the COT report again, there's a favor of shorts, or the open interest is higher on the shorts on Japanese yen. And if you take a look at any currency pair with the Japanese yen, Euro Japanese yen, we've got new higher highs just a bit away, and the same goes for Japanese yen and pound with new higher highs. Australian dollar, Japanese yen, which would be my probably most favorite one. If you are looking to sell Japanese yen, then I would go for probably against the Australian dollar. And with that being said, I think, I mean, the sky is the limit maybe with the Japanese yen. So 108 could be a nice level all the way down as a swing trade. Yeah, for me, honestly, it's a little bit more extended. So I don't like entering that much of a extended markets, but I mean, could be just like a gold, you know, no correction, just the opposite direction. What's your view on Japanese yen, Canon? Because from the BOG, there's not much that changed actually.
Exactly.
So
you can, a lot of these yen pairs, like I think there's more upside to come basically with UJ, EJ, GJ, and AJ. I think we're going to continue to push the upside, but obviously be careful when you look at the Japanese yen index. We're coming up to those lows where obviously we had intervention in July 2024. But at the end of the day, as I said, markets will just continue to test the Japanese yen's officials' hands until they do something. And that's it, because you can't deny where, as I say, follow the flow of money, and where you're getting a low yield, a low interest in Japan, and you're going to take that money and you're going to continue to see those outflows into US, into UK, into Europe, so on and so forth. So until something drastic happens, i.e. they start hiking aggressively or we get intervention, this is just going to keep pushing higher. Dips are going to continue to be bought. There's nothing that can stop it. Like the safe haven trade is not even working for yen right now, you know? So yeah.
Makes sense. Joe is asking, guys, can we see some of your live trades? Do you know
some
what?
Of your live traders.
Yeah, no, it's live traders.
Live traders, get it right. Your live traders.
Sorry, my bad. Guys, can we...
sorry, he's corrected it. There we go, traders.
Yes. Live traders, Joel, what do you mean, live traders?
Well, I'm ready. Yeah, I'm ready. I noted those Aussie CAD longs. That's all that I'm in live right now. What are we now trading? Yeah, well, I think it would make a lot of sense if we get a little bit on lower time frames, like without analysis. I mean, it's hard because you and me, we are swing traders, but I'm trying to find something that I can trade on 1 hour, 15 minutes, so we can open the trade during the live stream session. So hopefully we'll get something. We should definitely work on that ASAP. And looking at bringing something to the stream on that, Jake.
Yeah, I mean, the only analysis that I was just chatting to people in a chat that we're going to have another stream about the volume, because that was one reason for me adding this indicator and like this strategy into my list of strategies, because I wanted to trade something in lower time frames. And as I said, there's the strategy, I've probably explained it too many times, but trading towards those important zones. So I'll probably, for the next stream, I'll do analysis of all the currency pairs, and when I'll see that these zones of interest, like I did with the Euro US dollar last week, when I was saying, and I shared it today on Instagram, that we're going to hit this level 1.166, so I'm going to just find a lot of levels and try to trade towards them as a magnet. But that's the only analysis or strategy I can execute during the live streams that would probably be on 15-minute time frame. Because I've been also taking a look into the fair value gap since Angel brought it up, and the order blocks, because those are mostly strategies that you can trade on lower time frames, but not one of them is for me. I'm not confident enough to like give you live trades on these strategies, so I'll probably focus on the volume. I don't know if you have any strategy that you can execute in lower time frames, or Angel, but I'll try to deliver something on Wednesday.
Yeah, same.
Yeah, I can.
Sorry, just quickly. Yeah, I'll try and deliver something. As I said, the only thing that I'd be looking at would be obviously the Asian range, which I've walked you guys through. But it would, sometimes that happens London AM. Sometimes that the entry comes like now, at New York 2:30. So, but outside of that, I do have some others which I can look at. We can look at discussing and executing further moving forwards.
Okay.
An intraday play for intraday plays, yeah.
And Angel, you said, if I'm not mistaken, that you've got a certain window in your trading, like a 2 or 3 hour window where you trade. Is that right?
Yeah, I mean, I do only trade like from 10 a.m. to 11 a.m. most of the time, because it's where mostly I'll see the trades within that time frame. But I like to trade the macros, right? It's a 20-minute window. It's like the last 15-minute candle closers. So it's pretty much like from 9:50 to 10:10 and 10:50 to 11:10. You'll see a lot of opportunities presenting itself during that time window. And most of the time I'm trading that window. Like if you look right now, it just happened what I told you guys. If you look at, let me just share the screen real quick.
Yeah.
Right?
Go ahead.
All right. It's going to be dark because I like to trade with dark background. Now I'm already changed that. But look at this, right? I told you guys how I was expecting pretty much the price to form an M5 or M15 gap to start trading higher. And that's what happened here. We had the M5 gap right here, the price straight through the gap, and now we're starting to rip up higher from here. And if you look at the macros, right, and I'll do this macro tracker, and I'll go to the lower time frame, you will see that this is happening during that macro time frame, right? The start of the retracement and the price is starting to run higher. So when the time is like close to this macro or within the macro, and I'll see those retracement, it's like a confirmation for me, just more confidence for me to take the trade. I'll take the trade here, but as I told you guys, I'm playing pretty much with cautious today to take any trades. But as of today, with this price like this, I would like to see a retracement back into the M15 gap, not the M5, right? Today, then I would like to see at 10 a.m., which is within like 1 minute, right? A retracement back into this gap and maybe a divergence between NQ and ES on this gap. And then I'm going to look for the lower time frames for a BOS, right? And then pretty much trade that, because if you use a Fibonacci here, it's pretty much the same every time. You just change the time frame to a lower time frame. You scale from there. So you see the 50% actually matches with this gap on the M15. So that's going to be at 10 a.m. once the new 4-hour candle rebalance, and it will be nice to see then a retracement back into this gap, right? The discount area. So once we tap here, I'm going to look on the lower time frame for any change in the market structure to go back to bullish again, and I'm going to target this high, the new weekly opening high, this high right here, and all the liquidity that we have resting.
Okay. Looks nice, actually.
Yeah, there's going to be something like this.
I don't want to flatter you too much because Ken is going to tell that I'm going to curse you again.
Take care.
Yeah.
Something like this. This is what I would like to see in the next 2 hours, maybe. But yeah, let's see. We'll see what happens. I'm not getting into any trades yet.
We'll see. We'll see. So on the Wednesday, guys, I promise you, I'll try to find something that we can trade during the live stream.
Yeah, man.
Something on 1 hour or 15 minutes chart, so we can enter the trade as we go into the stream. So bring your friends. Maybe you'll have a good laugh on me trading lower time frames, but we'll see how it goes.
Awesome.
Okay. So from me, that's all. I believe, guys, you have analyzed your instruments, or is there anything else you would like to share, or are we good to go today?
All good on my side.
Perfect. Angel, you're good to go?
Yes, sir. I'm ready. I'm ready
Perfect.
to go.
Let me take a look into the chat if I didn't miss anything. No. Okay, perfect. So, hey guys, thank you so much for being here. Also, thank you, Ken and Angel, for your analysis. And I'll see you in a Discord with the poll that I promised you I'm going to create. And you'll see 3 of us again on Wednesday's live stream session. So, until then, take care, guys.
Awesome. See you guys.
Catch you all later.
Peace